So I built this volatility breakout system that runs 2 hours of exposure, and it's a symmetrical entry, whereas I'm going to break out both directions. If the market goes beyond 4 pips up or down from the current price, it's going to fill me on these, whichever one happens first. And then I got to stop here of about 14 pips. In a perfect world, imagine there's no spread. Problem is, with this script here, you'd have to actually figure, well, what's the broker charging 3 pips spread? You got to take that off this number, which makes this stop tighter than it looks. You're going to buy 4 above here, so you're going to overpay. And then you got to put your stop 10 below where you're at when you get filled here. So that's 14 pips spread plus 3, because your broker's going to rip you off on the exit, right? Or they're going to make their money. And then so you have to put it was like 20 pips. You might get slippage, blah, blah, blah. And you're looking to make 15, or you're looking to make 10. So it's kind of a scalp. It's not even good as break even, but this is a higher probability trade. And then if the market keeps on plunging past 15 on the ask, you get stopped out here at 10. You go into free fall for 20 pips. You get in here, and this is like like a mini iceberg order, a shallow sand drift order, because this is going to get in 15 minutes. Presupposing 15 minutes is gone. You know, so it depends how fast the market is. So if it takes forever for this market to climb out of some narrow, I guess 8 pips on either side, imagine there's no spread. It's a perfect world. And the same here. If it spikes 20 pips up or plunges 20 pips down, you're getting filled in this iceberg with a 10 pip stop, and you're looking to make 15 pips. And that's if you're dropping this order every time the market's moving 10 pips every 15 minutes, then it's riding along with it. You know, you kind of have to gauge how much risk you want to expose yourself. Now the next one's 15. It's going to go 30 pips deep in 15 minutes. So it's kind of like time price squared, 10 pips per 15-minute block. You get to I get up, my biggest order here is 2 hours, and I'm going to be sitting in there at 60 pips deep, waiting to get filled on a plunge. Now this has a 20 pip stop, but this is going to make like 35 pips. So this is going to make some decent money here. 35 pips, risk 20. That's not bad, especially if the market is moving every 15 minutes. This whole order bank is literally shifting and riding with what's going on. You don't care what's going on. This is non-directional trading. It's nothing but volatility breakout, and I think it's the only way to make money. I mean, you can sit there and you can put a moving average on something, but you can have your the market move in a spike pattern just out of nowhere randomly, because completely anything can happen, and then you just wiped out everything. So here now I'm getting in today at the end of the day here, and this is I also have a 1 hour in here, so 1 hour is like 40 pips deep. So if I don't get stopped out of this thing, then I'm going to but I have to have the only criteria for pulling the trigger on this is the market's quiet. So you can kind of overtrade this in a way, because you're not, like, if you had built say a 8-hour order script that only got in when the market went into a 10 pip breakout. So it really the market has to really heat up. The only problem with that is you're going to get snagged by a market maker, because now you're filling on a order that is really it's a static thing. It's right at the edge of the market. It's a stop entry to go in one direction. They're going to grab that pull 10. You have to have very tight stops on everything, because and just you can't worry about the losses. You just have to, what you're betting is time. You're betting on the clock. This is a 30-minute chart, so here's a half hour where you would just hit the keys repeatedly, because you have a quiet. You're in a 20 pip. This is 10 pip handle, so you're in a 20 pip zone, 15 pip zone, 20. 20 pip zone for or you could get something that turns color every. I haven't found a thing that turns color. Say it turns a different color every time it gets within 20 pips of volatility. Of course, if you go to the 15, you probably capture a nice 10 pip window to drop the 15 order. And so this is going to put in 4 orders. We just put a stop entry to get in, whether we go up or down, and it's got a like a mini spike either direction. Whatever happens, completely the same choppy crap that's been going on all day. This has been running all day. Of course, whenever I had a chance, I had to go do some surgery on the car, but now I'm back to, I can figure, am I going to put in orders that last for the next 8 hours that are, it's really got to break out, and I'll run the risk of getting that. I have the tight stops on this. You're not really psychologically invested because you've already chosen the time frame you want to trade, and you don't care where it goes. So now if I wait another 15 minutes and I come back and I punch the same order, it's going to come down and ride with it, and not to mention the other ones have expired. So what it picks up, and what it doesn't, it just walks away from. There isn't any bias to it other than volatility. So on the 5-minute chart, you just spent about a half hour just dilly-dallying here. But had you been at the keyboard punching a tight breakout, or even you could have, they're not in here, but I could have in here the first order bank could be buy at the market, sell at the market, put on immediate hedge. I know people say hedging's not good. That's people that think they know where the market's going, I think, right? Because then you're babysitting it. You're like, oh yeah, it's going up. You're psychologically invested in the direction of the market, which could be really an awful thing if you're a perfectionist, because you're thinking, oh, it didn't go exactly how I think. Of course, if you're impatient, you're looking at the market going, come on, people, really? You're not gonna, like, this is the price for really? And you just in disbelief. So this takes all the belief system out of it. This is pure mechanical trading. Not to say it's not there's no skill, because there is still you could still hit too many buttons and expose yourself over more than 2 hours of a market. But in this thing here, you're doing it like you're like, see this swing here earlier. Now I was at the keyboard. I did see this happen, so I did take profits on what I had, and then I punched the keyboard very hard, knowing that most of the strategy I built is a breakout close to the market with icebergs. So even the icebergs would have got filled on this. I could have walked away from that probably had I wrote the program, if I wrote the script properly, because that happens all the time, this up and down garbage. And presupposing you have at least a 3-to-1 risk to reward ratio on each ticket, because you're hedging. So when you get stopped out, you're not making 3-to-1. If every order plays out in that script, you should make a little bit, or you lose very, very little. So the next order, if the market just moved another 10 to 20 pips, it's a completely valid scenario. It happens all the time. The market goes sideways. It's really a sideways, because volatility breakout systems really are a sideways system. It's going sideways, and you're waiting for the players to come back and start to scramble the deck, shuffle the deck, and then, during the shuffling, you're making money, and then when the market's dead as a doornail, you're not even getting exposed filled on some of these orders, because if you have a 20 pip stop sitting out and it only lasts for an hour or 3 hours or 6 hours, it's probably not going to fill. And if the other one fills, then it's probably the market is going to drift now, and it's going to go into drift mode. But you're in lightly, so you're really in. You could always have more orders on the 15s, because like when the news comes out, you just drop every order you have. Because all those scenarios should be valid. If the market goes down 120 pips, it's probably going to bounce 40 pips, or it may not bounce at all. if you have enough time and equity, you would put in scalps. You put iceberg scalps down there that are peppered like, 20 pips on each. Every time the market drops 25 pips, you're getting in on a cluster. And then you can have that strewn about like all over. Of course, you have to dedicate a broker to that. I don't think you'd want to try to trade around that. Like, oh, I think I'm going to get in here, and I think the market's going to go up. No, you want to walk away from that because you want that to play out and prove it's a valid system. And I think it would be. Of course, it's kind of counter. The rest of the world wants to make the call and say gold's going to 1,000 or it's going to 2,000, and they love the ego trip of the I just do what I tell you, it's going to 2,000. I mean, yeah, but great. How did you ride it? Can you ride it? Because what happens when it spikes to $885 just before it goes to 1,500 one day last week, right? And you're like, whoa, I guess. Oof. So, I mean, how big are you in that thing? Did you have stops in there? And this thing, I've actually got stops in this thing. So if we do keep melting, this is going to pick me up on the way down. And you just have to believe that you wrote tight enough. Okay, so now you really can't touch this thing. You could only safely drop orders every 2 hours. If this is, because then every 2 hours, you don't have to reassess even. The market's already right now coming down to reassess itself. So, and the beauty of this broker is they're going to give you, once you're totally hedged, you won't use any margin here. And of course, here you just have a lower risk ratio, because even though this broker is not giving you that discount, they're saying, oh, well, you're long, you're short. Oh my God, what could go wrong, right? If you're equally long and short, and then when the market really heats up, it busts out of your tight stops and smash your in, and then hopefully it cascades into these icebergs. Now, I think this is the hard part, and I've been doing a lot of charting of it. And I think if you consider that a 15-minute block is worth 10 pips, kind of to do the math all the way out there, that's 40 pips in an hour, I think, right? Or no, that's yeah, and it's 40 pips in an hour, and then you're going to have to go and times that to, I wouldn't go past 8-hour orders, because say you put a stop in here and it's 20 pips wide, 8 hours goes by, and that's the worst price in the world. As this comes ripping back, it's probably going to be the next place where they rally up here and just trim the tops of the trees and then pull it all the way back. So you're going to get trapped in that nonsense. Of course, this is a 5-minute chart. So right here, one of these orders have already decayed. So now I'm going to put in, now I think we're going up. But I don't have to worry about, are we going, this is actually a symmetrical order. I think we're going up. So I'm going to load up on here. But if I'm wrong, it's going to fill me on the down fractal as I'm sitting right at pivot. So if you only pull the trigger at pivot, that's big, slow. So, okay, just loaded all 4 scripts in there with icebergs butterflied in there. And then here's the same in this broker, because this broker locks me out. They don't let me trade much. They've already used up all my thing here. So this is the 15, and this is the half hour. This is the 1 hour, and that's the 2 hour. And this is a lot tighter thing here. But see, now I want to load more of the 15s because I want to scalp this little explosion here. And if I'm wrong and it whips back, then I'll make that money. But I want to get this account up to like, when I get, plus I just want to get in the next 2 hours. So right now it's 11:30. And this is usually get a big move here. This is usually where London closes, and there's either a decision made, even though we've drifted sideways and just kind of tortured everybody in this sideways. This is a 25 pip grid, I do think it's going to explode up, and I want to sell when it gets up here. Just it's got to get up to here in 2 hours. So that's my max iceberg to the north, or what do you call that? But yeah, that's my story. I'm sticking to it.